proposal B. This one is a little bit different. It's not one that we've discussed before. This came about after our last meeting where we talked about the South Dakota v. Wayfair decision. This proposal would require out-of-state sellers that have more than $100,000 in sales or at least 200 separate transactions in Arkansas to collect and remit Arkansas sales and use taxes. The requirement would not be retroactive, and under this proposal, any revenues generated by this would be dedicated to reducing taxes. This proposal would also repeal 2651-201E, which is a provision that provides for a reduction of the 4 5/10% income tax rate in the middle income tax table to be reduced based on collection from out-of-state sellers. DFA has stated that this would result in an increase of approximately $35.4 million, with about $24.5 million of that being an increase in general revenues. As we talked about at the last meeting, the Supreme Court has removed the requirement that sellers have a physical presence in a state before a state can require that seller to collect sales and use taxes for sales in that state. As I mentioned at the last meeting, the Supreme Court did not decide the validity of South Dakota's law, but they did note many of the features of South Dakota's law that would mitigate the burden on interstate commerce and make it, a legal way for states to require out-of-state sellers to collect those taxes. And as I mentioned, Arkansas has some of that already in place because we are a member of Streamlined Sales and Use Tax Agreement. And this proposal would really just put into place the other parts of South Dakota's law that the court mentioned. So it's intended to conform with what the court indicated in South Dakota v. Wayfair would be a valid way of requiring these sellers to collect sales and use tax without overly burdening interstate commerce. So based on the comments of the Supreme Court in that decision, it's likely that this type of proposal would be upheld if it were challenged, but we can't know for sure until that case is really finished and we see what states do. With respect to the repeal of the current provision of income tax law that would reduce the 4.5% rate, no income tax rates have been reduced based on that provision yet, so there are no legal issues with repealing that. There are no Amendment 19 issues or anything related to that.
So, Joy, that would not have to be done prior to January for this 4.5%?
Correct.
So we can still do it in regular session without going to 3/4 requirement or something?
Right, that hasn't happened yet unless DFA, because that's based on looking at, I have to look again, at the collections over a year, and so I don't think that we're going to come close. And I think that DFA has mentioned that there's a question, they have a question over whether federal law, as used in that statute, actually allows for states to do this, because if it's, if you say that federal law means statutory law, Congress hasn't enacted anything. If you allow for the Supreme Court to create federal law, then it might. So I don't know if you want to say anything more on that.
Mr. Chair, certainly I think that the language of the statute that creates that trigger in the law, it does call upon federal law to authorize our state to impose sales tax collections on remote sellers. And I think it's arguable, I think there are positions on either side that are reasonable nature, but I don't think that Congress, we would look to see if Congress actually passed the Marketplace Fairness Act or some other provision that authorizes states to impose sales tax collections on remote sellers. We think just a Supreme Court case that passed upon the whether or not the Commerce Clause was implicated by South Dakota's state law, I think it's not really getting to the point of passing the bar that what that trigger would be implicated.
Okay. Sarah Dotson, you want to comment on this and then we'll have a discussion?
Thank you, Mr. Chair.
What I prefer to do on these is, as we go, after we get the explanation, you have some questions for staff, that's fine. But then see there's a motion and a second, and then we'll move into discussion. So.
I'm a proud representative.
You better make sure the other callers.
Don't call me a senator. No. Anyway.
My bad.
Thank you, Mr. Chair. So after as was laid out, this was obviously something that was hotly contested during the last session, but the Supreme Court has made a ruling on it. This is certainly constitutional as of this moment in these guidelines. In the broader overall sense of what we're trying to do here, trying to make our tax code more fair, more across the board streamlined. This broadens the base and moves toward the goal of lowering the rate of income taxes. And so I would move that we include this in the final report.
Is there a second? A second. I've got a couple questions, and again, I think, members, I want you to, this is perhaps one of the most important items that we're going to discuss today, because it's a result of constitutional or the Supreme Court ruling, and it's something we ruled around for session after session, and I think this task force needs to weigh in on this, so I'm glad to see it on the list. Senator Peake, you recognize.